So the announcement was made just a few days ago, and already the questions are pouring in. So, to try to help today, I'm going to walk you through the two key changes that are coming into effect on December 14th. So, to begin with, let's talk about mortgage insurance. According to the announcement, the federal government is raising the price cap for insured mortgages, increasing the limit on a property from a $1 million price tag to a $1.5 million price tag. So, the idea is it allows buyers within that range to qualify for mortgage insurance. So, what the heck does that mean? Until recently, if you had less than a 20% down payment saved up, you would have needed to obtain mortgage insurance when buying a house. This is still true. The part that's changed is the amount that you could spend on the house in order to qualify for less than 20% down payment. So until this announcement, the limit you could spend on a house and still bring less than the 20% down payment to the table was $1 million, or effectively $999,999. You get the idea. But beginning December 14th of this year, you can now spend up to $1.5 million on a home and still qualify for mortgage insurance. So this means that you can have a much lower down payment available than 20% and still be able to buy a home over $1 million. Now, of course, you don't need to spend all the way up to $1.5 million on a home. It basically gets you into that property more quickly rather than waiting another year or 18 months to save up the extra down payment. Now, it's important to understand that mortgage insurance, like any insurance, costs money. So the risk that your bank is taking in allowing you to borrow more on a more expensive house is mitigated by this mortgage insurance. Now, this is usually tacked on to the mortgage principal. So it's not like an extra closing cost. It's tacked on to the principal of the mortgage. So what that means is it will make your mortgage payments a little bit higher. But for many people, this is preferable to waiting another year or two to save the extra for the down payment. So, in short, the idea is to make the dream of home ownership a reality for more people, especially in places like the GTA, where, let's face it, pretty common to be looking at houses around the $1 million mark or more. So the other important change is the expansion of 30-year amortization periods for insured mortgages. Remember, an insured mortgage means that you have a less than 20% down payment to put towards the purchase. So the idea with this change is that longer amortization periods help to ease the burden of the higher interest rates. You can actually click below the video in the article to use my amortization calculator, and you'll see a noticeable difference in your monthly mortgage payments when you add in those additional 5 years to pay it off. So that's what it means. The longer amortization period means instead of having 25 years to pay off the mortgage, you have 30 years to pay it off, which brings your payments down. Now, I am not a mortgage broker or a financial advisor, but buyers should generally understand that a longer amortization, a longer time to pay off the mortgage, means that in those mortgage payments, you will be paying less towards the principal and more towards the interest, particularly in the early years of the mortgage. So make sure you touch base with your friendly neighborhood mortgage broker to discuss your own personal situation. I always encourage my clients to make sure you have all the information and understand the financial implications before going ahead with a home purchase. Now, as you might imagine, there are lots of complexities built into these changes, and the government is still bringing points of clarification forward. It is important you get the best possible advice from your mortgage broker because no one likes financial surprises, especially with a purchase as big as a home. And remember, your situation is always going to be slightly different from someone else's because your debt will be different, your income will be different, your savings will, all of those things will be different. And lenders take all of those pieces into consideration. So it's important to understand the new mortgage rules as a sort of general guideline. But for your specific situation, definitely touch base with your bank or your mortgage broker, and they can help you understand what this means for you specifically. Now, if you do find yourself impacted by the new mortgage rules and that this does open doors for you as it's designed to do, please get in touch today so I can set you up on a customized home search and, of course, answer any questions you have. Thanks for watching. See you next time.